Hello everyone, and welcome back to the Web3 Daily. Let's dive into the latest market moving news today. First, a quick look at the overall market. To be honest, it feels like the entire market is just holding its breath at these high levels, not really committing to a direction. Bitcoin is playing tug-of-war right around the $112,000 mark. The bulls are trying to push it up, but the bears are pulling it right back down. Ethereum is looking a little stronger, holding about $4,300. Mainly propped up by the anticipation surrounding the upcoming ETFs. I checked the Fear and Greed Index, and it's sitting at 51 dead neutral. That pretty much sums up the mood right now. Everyone seems a bit lost, unsure of where we're headed next. The total market cap saw a slight bump, but the volume isn't really there to back it up, which frankly makes me a bit uneasy about this move. So, in the short term, we're likely looking at more sideways chop. My advice? Be patient with your trades, and keep a close eye on your risk. Alright, enough about the charts. Let's get into the topic that's got everyone talking today. And honestly, I think the significance of this story is massive. It feels like a door to a new world just got kicked open. The Wall Street giant, Nasdaq, has officially filed a proposal with the SEC. And what for? They want to start trading tokenized stocks directly on their exchange. When I first saw this news, my immediate thought was, the titans have arrived. This is different from MicroStrategy buying Bitcoin that's treating crypto as a treasury asset. What Nasdaq is doing is integrating the core technology of the crypto world, the blockchain, directly into their most fundamental business, securities trading. They're not building a separate new platform. Instead, they plan to have tokenized stocks and traditional stocks trade in the same order book. Have you thought about what that means? It means liquidity is no longer fragmented. The Apple stock you buy in the future could be part traditional, part tokenized, but their price and depths would be completely interchangeable. What's crucial here is that Nasdaq repeatedly emphasized in the filing that the rights you get with these tokenized stocks, like dividends and voting rights, are identical to traditional shares. And to put regulators at ease, the entire clearing and settlement process will still run on existing financial infrastructure handled by the depository trust company. In other words, they've wrapped a blockchain core in a package that traditional finance can understand and accept. How big of a move is this? This is like throwing a gallon of gasoline onto the fire of the real-world asset, or RWA sector. People used to say RWA was all talk, no action. Well, now you have the A-team, Nasdaq itself, entering the game. Do you think Goldman Sachs and JP Morgan are just going to sit back and watch? Of course, for native crypto exchanges like Coinbase, this is a huge challenge in the short term. Your competition just went from crypto startups to the king of Wall Street, but in the long run, the entire market pie is about to get exponentially bigger, and the path to compliance is being paved for everyone. For the industry as a whole, this is absolutely a historic tailwind. Okay, moving on from the grand narratives of Wall Street, let's turn to a fascinating piece of news that feels more like a modern myth, something straight out of the original Bitcoin ethos. Just yesterday, a solo miner with a hash rate so small it's almost negligible actually managed to mine a full Bitcoin block on their own block, number 913,593, and walked away with the entire 3.129 Bitcoin reward worth nearly $350,000. When I saw this, I was genuinely stunned. How much hash rate did this miner have? A mere 200 terahashes per second. To put that in perspective, the total network hash rate is currently around 800 exahashes per second, which is 800 million terahashes. This miner's contribution was less than 1/millionth of the total network power, a literal drop in the ocean. According to calculations by the founder of the CK pool, the probability of this miner finding a block at the current difficulty was about 1 in 36,000 per day. Someone compared it to buying the same lottery ticket every single day for decades and finally hitting the jackpot. We all know that Bitcoin mining has become a game for giants, dominated by massive corporate pools. But this story is like a spark. It reminds us that the game of probability Satoshi originally designed is, in theory, still open to every single participant, no matter how small. It's proof that the spirit of decentralization and permissionless access hasn't been completely extinguished by the flood of capital. Alright, after that inspiring underdog story, let's shift our focus back to the war between giants. The former undisputed king of NFTs, OpenSea, after being on the defensive against Blur for so long, has finally made a huge move. It feels like they're drawing their weapons for a head-on clash. OpenSea just dropped two major announcements at once. First, they've launched a $1 million flagship collection fund. Basically, they're becoming a whale themselves, dedicated to acquiring top-tier NFTs that are culturally significant in the space. And they immediately put their money where their mouth is by acquiring CryptoPunk number 5273. This move sends a clear signal. OpenSea wants the market to know they're more than just a transaction engine. They are guardians and builders of the culture, aiming to reclaim their leadership voice in the NFT world. But that might just be the appetizer. The real main course is the long-rumored OpenSea platform token, codenamed the SEA, which is finally on the horizon. The official announcement teases that starting September 15th, they will funnel 50% of all platform fees into a mega prize vault to reward users. Sound familiar? This is the same nuclear option Blur used to conquer the market. Ever since Blur's aggressive airdrop and trade mining strategy captured the majority of NFT market share, OpenSea has been losing ground. They held out for a long time, refusing to issue a token, but it seems they've finally been forced to act. This one-two punch building brand prestige by acquiring blue chips while preparing to share revenue with users via a token makes their objective crystal clear. They are coming to take back high-value users and trading liquidity from Blur. It looks like Season 2 of the NFT exchange wars is about to begin. Okay, after seeing that battle at the corporate level, let's pull back the lens and look at how the national teams are entering the game. Following in the footsteps of El Salvador, another sovereign nation, this time, the global mining powerhouse of Kazakhstan has officially added Bitcoin to its National Strategic Reserve Roadmap. The governor of the National Bank of Kazakhstan recently confirmed in a public address that they are actively developing a legal framework. The purpose, to officially establish a national reserve of Bitcoin and other cryptocurrencies. Why would they do this? The logic is actually crystal clear. Kazakhstan is already a top 3 global hub for Bitcoin mining, thanks to its abundant energy resources that attract miners from all over. This means a significant amount of Bitcoin is produced right on their home turf. Instead of letting this digital gold just flow out of the country, why not bring it under state control and make it part of the national wealth? The governor was explicit. The core objective is to diversify the nation's financial reserves and reduce its dependence on a single traditional fiat currency, especially the US dollar. So the next question is, where will the Bitcoin for this reserve come from? They have a plan for that too, with two main sources. Part of it will come from illicit crypto assets seized by local law enforcement. The other more significant part could come directly from the profits of state-owned enterprises that participate in mining. You see, this creates a closed loop from mining directly to the national reserve. The signal this sends is incredibly strong. If El Salvador's move to make Bitcoin legal tender was more of an idealistic social experiment, then Kazakhstan's move is treating Bitcoin as a tangible strategic reserve asset, on par with gold and foreign exchange. This shows that the narrative of Bitcoin as digital gold is being taken more and more seriously by sovereign nations. Okay, we just talked about the bold strategy of a national team in Central Asia. Now, let's shift our gaze back to the East. China's tech and finance giants are also starting to make a run into Web3, particularly in the RWA space, but in their own unique way. Ant Group's digital technology arm has officially announced a strategic partnership with another financial behemoth, Yunfeng Finance. Their goal is crystal clear: to jointly develop the market for tokenizing real-world assets, or RWA, and the related Web3 businesses. This is a classic powerhouse partnership with a very clear division of labor. Ant Group is providing the underlying blockchain technology through its dedicated public chain platform, Pharos. Meanwhile, Yunfeng Finance is bringing its compliant financial licenses in Hong Kong, along with its deep experience and resources in the financial sector. One brings the tech, the other brings the license. It's a very precise one-two punch. Now, pay attention to the key detail. The main battleground for this partnership is Hong Kong. This move is clearly riding the policy tailwind of Hong Kong's push to become a major hub for Web3 and virtual assets. They are not taking the wild grassroots approach of the crypto world. Instead, they are deploying a professional army strategy, targeting the institutional and regulated market from day one. This news sends two important signals. First, top-tier tech companies like Ant Group haven't given up on the blockchain and Web3 pie. They're just finding a path that is more compliant and deeply integrated with the real economy. Second, RWA, the star of our discussion today, isn't just being eyed by Western giants like Nasdaq. It's also seen as the next great blue ocean in the East. Giants from both the East and West, despite their completely different paths and styles, have set their sights on RWA at almost the exact same time. Do you really think that's just a coincidence? Okay. After talking about the giants' RWA strategies in the regulated world, let's dive headfirst back into the native world of DeFi and see what kind of crazy stories are unfolding. Today's protagonist is a yield market protocol that's been on an absolute tear recently. Pando. Just how insane are Pando's latest numbers? Its total value locked, or TVL, has skyrocketed by over $10 billion in a single month. What does that tell you? It means a massive amount of hot money and smart money is flooding into this sector, trying to capitalize on the yield tokenization narrative. So how did they pull this off? There are two core reasons. First, it's a unique yield tokenization model, which splits an interest-bearing asset into its future principal and yield components, gives players incredible flexibility and room for leverage. Second, and this is the most critical part, it has deeply integrated with Ethereum's stablecoin, USD. Many whales and advanced players are using an extreme looping strategy. They deposit USD on Aave, borrow stablecoins, plow that back into Pando's products, then redeposit the received tokens, and repeat the cycle, just to max out their leverage and capture those eye-poppingly high yields. However, behind this explosive growth lies a ticking time bomb. Have you noticed that Pando's prosperity is built almost entirely on the foundation of Ethereum and its USD? This heavy reliance on a single asset creates a massive concentration of risk. Let's game out a scenario. What happens if Ethereum's yield model falters, say? The perpetual futures funding rates turn negative, causing USD's yield to plummet, or even risk a depeg. All those stacked leverage positions on Aave would face a massive, cascading liquidation event. The resulting stampede for the exits would instantly drain Pando's liquidity, and the entire elegantly designed system could face the risk of collapse. So while everyone is enjoying the high yields, it is absolutely crucial to stay vigilant about this kind of systemic risk. Okay, after discussing the risks and opportunities in the macro world of DeFi, let's end with one final important signal on the macro level. This signal might just hint at the internal power structure of the entire crypto market is undergoing a subtle but profound shift. According to the latest report from the well-known data firm Kaiko, for the first time in 5 years, Ethereum's spot trading volume on centralized exchanges has officially surpassed Bitcoin's. Now, when most people see this, their first reaction is probably, of course, it's the Ethereum spot ETF, right? Money is just front-running the hype. And that's certainly a major reason. A ton of speculative and arbitrage capital is flooding in ahead of the official ETF approval. But if we stop there, we're only scratching the surface. The report and on-chain data actually reveal deeper reasons. First, Ethereum's own fundamentals are incredibly strong. Its price already broke its 2021 all-time high at the end of August, which in itself has ignited powerful spot buying demand. Second, the ETH-BTC ratio has also been strengthening recently, indicating that at this particular stage, smart money and market sentiment are more bullish on Ethereum's performance. And finally, let's not forget Ethereum's vast Layer 2 ecosystem. The continuous buzz of on-chain activity brings real value capture and genuine transaction demand for Ethereum. So, this flip in trading volume isn't the result of a single event. It's the result of three forces resonating together: ETF anticipation, strong fundamentals, and a vibrant ecosystem. This could be a significant signal that the market is quietly shifting from the singular digital gold narrative of the past toward a more diverse, application-driven value system. Alright, that wraps up today's Web3 Daily. If you found this report helpful, be sure to hit that like button to show your support. We're here every day, cutting through the noise to bring you the most important information in the Web3 world, the core insights that are closest to the money. We hope that by curating this content, we can help you make more rational and informed decisions on your Web3 investment journey. Also, I've left exclusive sign-up links for all the major exchanges in the description below. These are special high rebate deals we've arranged for our community to help you save some costs along the way. Let's all stay rational, keep building steadily in the Web3 world, and get wealthy, slowly. May everyone's crypto portfolio see steady growth. We'll see you tomorrow.